Welcome back to the show, everyone. I'm Noah, and today we have a truly fascinating topic to dive into. Eloise, it's great to have you here.
Thanks for having me, Noah. I'm really looking forward to this conversation.
Eloise, you're an expert in real estate investment, and today we're exploring an emerging frontier, tourism-led real estate. What exactly does that mean for our listeners?
Well, Noah, it's essentially about properties primarily used for short-term rentals by travelers. Think vacation homes, resort properties, or even boutique apartments in popular destinations.
So it's distinct from traditional urban residential or commercial properties then. What makes it such an attractive investment right now, especially when we hear about stagnation in other real estate sectors?
Precisely. The key drivers are often passive income generation through those short-term rentals, which can yield higher nightly rates, and significant long-term capital gain potential as global tourism continues to grow.
That passive income aspect sounds particularly appealing. How does that typically work for an investor?
It can be truly passive if you work with a professional property management company. They handle everything from bookings and cleaning to maintenance, freeing up the investor from those day-to-day responsibilities.
So, beyond just the rental income, what about the long-term capital gain potential you mentioned? How does that play out in tourism-led real estate?
Well, Noah, property appreciation here is often driven by increasing global tourism and infrastructure development in popular areas. As demand for unique travel experiences grows, so does the value of these properties, especially in prime locations. Investing in emerging tourist hotspots can lead to significant appreciation as those areas develop and become more popular. It's also often less susceptible to local economic downturns because the demand is global.
That's a really interesting point about global demand. It sounds like a stark contrast to some of the challenges we're seeing in traditional urban real estate markets right now. Can you elaborate on those challenges?
Absolutely. Many urban markets, especially residential and office sectors, are facing saturation and slower appreciation rates. We've also seen them be quite sensitive to interest rate hikes, which impacts affordability. Plus, demographic shifts like work from home trends have reduced demand for traditional office spaces. And let's not forget the lower rental yields and stricter regulatory burdens in many major cities.
So, if urban markets are facing these headwinds, what are the specific advantages that make tourism-led real estate a more attractive alternative for investors?
For starters, the income potential is often much higher. Short-term rental rates can be significantly more than long-term rates, especially during peak seasons or major events. It also offers great diversification. Your investment is tied to the global travel economy, not just a specific local job market. And honestly, there's a lifestyle benefit too, as owners can often use the property themselves for vacations.
That's a nice perk. What about resilience? We've seen how global events can impact travel.
While susceptible to travel restrictions, the sector often sees rapid recovery and pent-up demand once things ease. It aligns perfectly with the experience economy, where people prioritize unique travel over material goods.
And, there are potential tax advantages like depreciation deductions and the ability to write off expenses related to property management and even travel for property visits.
That's a comprehensive list of benefits. Now, for many listeners, the idea of owning a vacation home or resort property might seem out of reach financially. Are there ways to access these high-value assets without buying the entire property outright?
That's where fractional ownership comes in, Noah. It's a model where multiple individuals collectively own a share of a high-value asset, like a luxury vacation home or a resort villa. It's actual equity ownership, not like a timeshare.
So it lowers the barrier to entry for luxury properties.
Exactly. It makes acquiring a piece of prime real estate in desirable, often exclusive tourist destinations much more accessible. Plus, all the operating expenses, maintenance, taxes, insurance are split among the co-owners. That sounds like a significant reduction in the financial burden and day-to-day responsibilities.
It really is. Most fractional ownership schemes also include professional management services. They handle everything from upkeep to scheduling and cleaning, ensuring a truly hassle-free experience for the owners.
And how does it work for usage? Do owners just get a certain number of weeks per year?
Typically, yes. Owners receive a predetermined number of usage periods, often on a rotating schedule to ensure fair access to peak times. It gives you the benefits of a vacation home without the year round costs and responsibilities.
That's a clever way to blend investment with personal enjoyment. It also seems like it could offer a level of diversification that's hard to achieve with whole ownership.
Precisely. You can spread your capital across multiple fractional properties in different locations, rather than tying up a large sum in a single asset. This reduces risk associated with any one market or property.
Eloise, this has been such an insightful discussion. It really feels like we've uncovered a compelling alternative to traditional real estate, especially with all the headwinds those markets are facing.
Absolutely, Noah. It's clear that tourism led real estate offers a unique blend of strong income potential and capital appreciation, often driven by global demand rather than just local factors.
And the way you broke down fractional ownership, making luxury properties accessible, that's a game changer for many investors who might have thought this sector was out of reach.
It truly democratizes access to high value assets, allowing for diversification across different locations without the full financial burden. It's about smart, strategic investment.
It really highlights how the experience economy is shaping investment opportunities. People are prioritizing travel and unique stays, and that's directly translating into value for these properties.
Precisely. It's a sector that aligns with evolving consumer behavior, and with professional management, it can genuinely be a passive income stream with significant long term growth.
So, for our listeners considering their next investment move, it sounds like looking beyond the city to tourism led real estate is definitely worth exploring.
I certainly think so. It offers resilience and exciting prospects in a dynamic global market.
Eloise, thank you so much for sharing your expertise with us today. This has been incredibly valuable.
My pleasure, Noah. Thanks for having me.
And thank you, our listeners, for joining us on Beyond the City. We'll catch you next time.